Hello, 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 hello. What's going on, everybody? Welcome to Al Stock Trades. How's everybody doing today? Hello, hello, hello. All right. So, yesterday was a fiery video. If you haven't watched it, please do. It shows you how confident I am and what's about to come in the next couple of years. So in this video, we're going to go ahead and do a couple of things. I'm going to go ahead and explain. First off, let me just remove this. It's a little distracting for me. Okay, hold on. Okay, let me remove that. All right. So, we're going to go ahead and talk about Alignment Healthcare. And we're going to do an intrinsic value calculation. And I'm going to explain to you why this thing's up, 57%. Why is this at $18? We're going to figure it out. I'm going to teach you deep financial analysis. And by the time you walk out of this video, you're going to know more about finance and how to calculate your own and set your own price target, right? Now, of course, you have to use the software that we have, but at least you'll know exactly where to go if you want to build your own software, right? Big thing here, I want to point out, again, I don't like talking about this, but I just want to give you the whole point of this, right? The whole point of AL Stock Trades, the AL Stock Trades platform, is, this is me, innocent me. I was a little kid, worked hard, and, graduated top of my class with 3 degrees. And I was honored to be one of the, top graduates, right? And his little cats. For me, I thought that if you work hard, put your head down, work hard, and follow your American dream, you could get somewhere, right? There is truth to that, right? Oh, no, my God. Yeah, have I gained some weight? Dude, I've gained a lot of weight. I'm trying to freaking lose it. Oh, my God, dude, you're killing me. I got to lose that weight. I became a freaking fat ass. Don't call me Albert. Call me Fat Albert. You know what I mean? I know the cats. Yeah, these cats are very highly educated, right? They used to listen to my lecturing. No, so, guys, I like to think you guys are fun. Money, weight, bro. It's all the money. It's the money, right? But then all of a sudden I realized as I got to these elite fields in life, I realized that people that tend to get these jobs, they usually know the person. They usually have a family member that's part of this elite field. And I realized there's something in this world that we live in corporate America. I haven't really used this word a lot. I'm going to spell it if you got to spell it correctly. It's called nepotism, right? The practice among those with power or influence of favoring relatives, friends, or associates, especially by giving them jobs. It's unfortunate, the world we live in. I don't want to spend too much time on this. I want to do an intrinsic value, right? But I want to just point out, you have to ask yourself, why the hell do I have 800 freaking videos on YouTube, right? When I think I monetize the videos so I can essentially be able to be on YouTube's good side so YouTube can push it out because they're making money on the video too. I think I make maybe $2 per video, right? So, you guys know how much money I have, right? So there's no reason for me to, there's no reason for me to do this, right? If I was trying to, milk those $2, right? The reason why I'm doing this is because, because someone sent me an email saying, Al, I don't know what drives you, Again, I don't know the answer to that, but I can tell you how I feel, right? And maybe you can figure out, maybe you can tell me why I do this. I'm just tired of good, hard working people getting screwed by the system. You don't understand. I want to scream of how I, can you split the two between your lifetime members? Yeah, I mean, how do you break half a penny? Maybe I should just make a token off of my YouTube channel. No, screw that. Then you have those crazy people that will spike that coin, right? We're not going down that route, right? The point is I'm just tired. You understand how tired I am? If you read this article, you've seen I've tutored over thousands of students in neurobiology, organic chemistry, and all these things. And I'm telling you guys, the world, no matter how hard you work, it's who you know, right? And I know you already know that, but the problem is okay, fine. How do you get rich in a country that doesn't value you? I figured it out. I found a way how to make money in the United States, and you can figure it out. For people that are in other parts of the world, you can replicate this if you have access to the United States stock market, right? I figured it out. I found a way out of hell. I found a way out of poverty, right? And I personally, for me, I cannot sit with myself knowing that I know this information and not be able to share it with all of you. I took an oath in medicine. It's called the Hippocratic Oath. I take this oath very seriously, right? Medicine is not a, money game for me. I did not go into medicine to make money. I took an oath, and one of my favorite parts of the oath, it says warmth and sympathy outweigh the surgeon's knife and the chemist's drug. By the time I see patients, it's already too late for them. They've had their stroke, hemorrhagic sometimes. It's too late for them. It's done. Right? It's hard. When I say it's done, we still save them. But like, I wish I got to them earlier to where we could have prevented that. And the only way to do that is you got to give them money. You got to have them be able to live in a good neighborhood, good food, green food, vegetables and whatnot, right? So if you ask yourself, what's this guy's catch? Why is this guy on here? Again, I have an itch, and, the fact that I was able to save one person and make one person a millionaire, I am so fucking happy, right? But then I have all of you guys here watching, right? Shant, Kenneth, B-Rad Cooley, this, how you say that? Aklaba. It sounds like baklava, right? He's from Belgium. It's 11:15 p.m. I have all these people here, right? This is amazing. What more do I want from like when I take my last breath and I look up to God, I can say, you know what, man? I did what I did. I promised you that if you get me off of homelessness, if you get me off of these streets, I'm going to do whatever I can to serve you and be able to help, your children. And I've done that, and I'm going to continue doing that. So anywho, yeah, someone asked me the question, and I said, you know what? I don't know. I just want to help, right? So, okay. So now we went over this. Let's go ahead and talk about Alignment Healthcare and whatnot, okay? No, I appreciate you, Dr. Patel. Yeah, because you don't take nothing with you, right? You don't take nothing with you, right? So what else makes sense, right? What else makes sense, right? And on top of it, it's Good Friday. Happy Easter to all of you guys, right? What a wonderful day, right? Right? I would have probably sold my 245 shares at $1 if I hadn't been paying attention. Exactly. And you know who you would have sold it to? You would have sold it to Wall Street. And guess what? We have the graphs from our Al Stock Trades Premium channel. We have the graphs to show you that Wall Street was buying. Right? So I appreciate you, B-Rob, Okay. So let's figure out why, year to date, Clover's up 15%, but on the year, it's up 471%. It may look like Alignment Healthcare is outperforming Clover, but if you look at the year, Alignment Healthcare is only up 257%. When I say only, I'm being facetious. That's a lot, right? But look at it, right? So you could see kind of the situation here. From the top to bottom, we're up 462%. From Alignment, from the bottom here, it's up, 288. So Clover technically is still outperforming, even though the market cap for Alignment is higher. But what I want to do right now is I want to explain to you guys kind of, why did Alignment Healthcare go all the way from 4 to 18, right? So we're going to do that today, okay? So we're going to talk about that utilizing numbers like we always do. No opinions, just straight data, straight facts, right? Okay, so we're going to do that. But before we go ahead and do that, I want to go ahead and show you this wonderful lady here. She has a channel. It's called Medicare with Melissa. She has about 2,000 subscribers. I commented on her channel. I said, we have around 10K subs if you include the, with the Twitter and stuff, right? We have about 7,000 over there. I said I would like to interview you, given the recent changes and what happened with Humana. And she talks about Humana Medicare Advantage plans. And I found this interesting because I was trying to do some due diligence on Humana. And this was 2 years ago, right? This was February 11, 2023. So actually, yeah, about 2 years ago, right? Let's see. Someone messaged her here. Let me zoom in so you can see, right? And this was a year ago. You remember, Humana had some disruptions, right? Humana had some disruptions, and people are not happy. So someone said, I wouldn't touch a Humana plan. It doesn't matter how good the benefits look on paper. If Humana denies coverage when it comes time to pay, it's especially bad when they refuse to pay for skilled nursing care. Oh my God. You know how many times I've seen this for patients? I had around a 95-year-old elderly lady, man. It was terrible, right? So before the patient is ready to leave. And then this is her reply. Sounds like you've had a bad experience. Unfortunately, we hear stories like this from time to time with all carriers that offer Medicare. Remember, okay, so this is a more generic response. This is a PPO plan. She loves it, but I think their PPO plan's not doing well. There was a better response that she gave, kind of gave the situation here. Let's see. Yeah, the Advantage programs vary so much by location. You would think that if it works well in one state, it would work well in others. Not always the case. Also, common frustrations, right? I forget which one, but she comments in one of these comments saying Humana has changed over the past 2 years. They have changed to a point where, she was talking essentially what we've been predicting regarding the disruption. I'm trying to find the comment, but she was talking about how it's changed. Oh, here it is, right? Thanks for watching. And some Humana regions and plans did have some significant changes last year, right? So first the online pharmacy went, then the monthly 50 diabetic stipend. Now they're denying dental care for a couple bad teeth that need caps. Humana Advantage sucks. Anything better than this, or are they all out to screw us? I don't need this hassle. Then she says, thanks for watching. And some Humana regions plans did have some significant changes last year. These plans are very specific, and we encourage beneficiaries to review plans each year. And then she basically starts saying, well, we represent 25 other companies, and she tries to diverge them to the other companies, right? No, hey, I appreciate you. Hey, there it is. Catch you later with adventures. Yeah, I made this one early. Happy Good Friday. So the point is there is this, and by the way, this was 3 weeks ago. All her other comments was this was a very recent comment. This is 3 weeks ago, and she's saying that this guy's upset because they cut his benefits, and she's saying that they went under changes. So the point is there's a lot of disruption happening right now, and I don't even think she's even getting commission anymore, right? So I just wanted to just briefly talk about this, right? People are upset about Clover. Understand that we've made this graph a while ago, and we said that 80 days from now, which was whatever this was in February, May 18, we should get to some form of a new high. Of course, we'll figure out kind of what the Trump situation and whatnot, but regardless of what it is, the fundamentals don't lie. There's no tariff impact on Clover, so I think we're good there. So now let's go ahead and let's do the analysis for Alignment Healthcare. So let's go ahead and put ALHC, okay? And let's just zoom in a little bit here because sometimes it's hard to see, right? Let me zoom in a little bit more. No, because then it'll cut off the bottom here. So this is pretty good, okay, guys? All right. So if you go ahead and look at free cash flow, tell me when it turned positive. Negative, 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 negative. Okay. No positive. Again, I'm doing this on purpose, right? I know it's still negative. Then let's look at the income. Negative, 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 negative. Okay. So it's still negative. So why is Alignment Healthcare up? Why the hell is Alignment Healthcare up? I don't understand, right? Obviously, I do. I'm asking a rhetorical question so we can guide this learning process together. So now let's go ahead and let's hold on before we jump to quarterly. There's something else. Right? What is free cash flow? What the hell is free cash flow? Okay. So you have a couple ways to do this. We can open up the older terminal, right? Just the normal terminal, right? And this terminal has a lot of great information. In fact, let me just, before we even do this, let's look at the algo flow real quick. Again, this is normally, if you want to have access to algo flow, let me show you here. The algo flow shows you that, it's negative. You know what I mean? It's in the red. Clover's in the red for the algo side, right? Meaning that, it's still bearish. And let's see if we can get it maybe because it used to have the graph here, but I think it's because it's closed today. Let's see if we can find yeah, right. So it's red, right? So I don't expect it to go crazy green any soon, right? So that's interesting. So now let's go ahead and we'll go to so again, the algo flow is good because it tells you kind of what big money and what the options chain is leaning towards Clover, right? So that's why a lot of folks can use this to do covered calls, right? So I'm going to ask a question, okay? What is free cash flow? And within one sentence, please explain to me how it is calculated. Let me zoom in. Free cash flow is, by the way, this is our AI, right? Free cash flow is cash generated by a company after accounting for capital expenditures, calculating as operating cash flow minus capital expenditures. So the key number is operating cash flow. So free cash flow comes from operating cash flow subtracted from capital expenditures. What is capital expenditures? Property, plants, and equipment. But the big one is, this is called, again, free cash flow is called FCF. Operating cash flow is called OCF. Again, if this is the first time that you've heard about this, it's okay. It's a learning game. For the lifetime members, you already know what this is. Well, some of you do, right? So what is it? What does it say down here? Let's zoom in. AI summary analysis. Again, you have your own AI summary here. Operating cash flow. 2021 turned negative. What is this? 2024 turned positive? Wait, what? What does that mean? What do you mean OCF, operating cash flow turned positive? Where the hell is that? Oh, it's right here. Well, let's see when it turned positive. Negative. Again, they started trading here. Negative. 34 million. Wait, is this for alignment? $34 million? They're $34 million operating free cash flow? But wait a minute, their free cash flow is negative. But how is that? Oh, because operating cash flow subtracted from capital expenditures gives you free cash flow. So if we take 34.77 subtracted from 41.42, what do you get? You get negative 6.65, which is what this number is here, which is what this is here. So if you look at, now let's graph operating cash flow. You see how it was negative, 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 and then in 2024, it just turned positive. So what this tells me is that Alignment Healthcare is closer to becoming free cash flow positive. Think of calculus and derivatives, right? Oh, operating cash flow is the first derivative, right? Free cash flow is the second derivative. Those are for my math nerds out there. For the common people, which is me included in you guys, even though I know math too, but right, I don't use it. I'm not trying to be a nerd. You know what I mean? So I'm trying to be like you guys, right? So the best way to explain this is operating cash flow is like the bank, right? And under the pillow, after all that's said and all the spending is done, is the free cash flow. In order for the pillow to have cash, you need to make sure the bank has cash, right? That's like a very silly way of describing it. If you want the actual definition, you can click this question mark and it'll basically say, operating cash flow is the cash a company generates from its everyday business operations, indicating whether core activities produce sufficient cash to maintain or grow the business. Well, it's positive now for alignment, so of course it can maintain the business. What's the definition of free cash flow? Formula: free cash flow equals operating cash flow subtracted from CapEx, which is capital expenditures, right? Let me go ahead and zoom in so you can see what the hell this is, right? So free cash flow is cash left after covering operational costs and capital expenditures used often for dividends, share buybacks, and debt repayment. So now that we know that for the first time in the history, and don't include this is pre-public, right? This doesn't matter, right? Because they weren't publicly traded back then, right? This was their and also was around pre-COVID too. For the first time in the history of Alignment Healthcare, they now have OCF, operating cash flow positivity. So let me go ahead and let me remind you. Let me open up Tesla. Okay. Let's go ahead and go down here and this, by the way, this is Tesla. Okay. Now look at the plan. Tesla operating cash flow turned positive when? 2018. A year later, Tesla turned free cash flow positive in 2019. A year later, net income turned positive in 2020. So we can make a song, you know what I mean? Albert and Jessica sitting on a tree. KISS, all right? First comes operating cash flow, right? Then comes free cash flow. Then it comes the net income, right? I know that was a terrible song, but you get it, there's a process, right? The cool thing about Clover, now let's go ahead and put Clover. The thing about Clover is they both turned positive in the same freaking year. So that's pretty good, okay? That's why I'm laughing. They both turned positive. Free cash flow can't be positive without operating cash flow to be positive. You get it? But you have to ask, so what ended up happening is a lot of people on Wall Street, these smart bastards, they saw this and they were like, holy shit. So when did they see it? Let's open up the quarterly now, what B-Rat Cooley was saying, and let's open up the quarterly, right? And now let's just hide the free cash flow and just look at the operating, right? And look, Q2 was positive, Q3 was positive, but these two were negative, okay? So this is the first time they were net positive. Now, of course, if you look at free cash flow, let's look at free cash flow now, they did have some positives, right? So free cash flow, because it did turn positive in Q2, right? Then it turned negative in Q4, right? So that alignment now is about to be free cash flow positive. So when we do our analysis, we're going to use 34.77. You understand now? Again, I could have explained this to you in a minute, but the problem is only maybe 20% of you would have gotten it. So I took you on a mental journey on how we figured out and deduced it together. Sorry if you already knew this and you're just nodding your head. But again, there's other people out there that I want to take with me to the mountaintop, right? Because I want those people to learn this so they can change their lives because they have family too, okay? All right. So now that we know this number, now let's go ahead and I was going to put Clover here to compare. We'll just put, we already opened up Clover. We'll do a compare if you want, but let's go ahead now and let's look at the earnings transcript. So let's go ahead and pick up alignment. We're going to click on Q4 of 2020. Again, if you do Q1, they haven't reported yet, so there's no transcript available. So if you do Q4, our Al Stock Trades terminal takes everything they said and translates it into text. So you know exactly what these people said on their earnings, okay? And you can read the transcript that, the computer reads it for you. Like, I don't know if the mic can hear. I'll watch this.
Operator, good afternoon, and welcome to Alignment Healthcare's fourth.
You can make it read it faster.
Quarter 2024 earnings conference call and webcast operator instructions. Please note that this is.
But again, that's not the point of this, right? The point is, let me just kind of reset it here. Let me go to Q4, right? Make sure it's Q4. Q4 is right here. The point is, there's a lot of information here. They're talking about, what is this? Non-GAAP. That's good. we're going to go down and we're going to say, we're going to zoom in here. And we're going to generate insights. Okay. And once we generate insights, what's going to end up happening is they're going to take this information, right? And we could have done generate insights from the past 3 years. That's really amazing. But what I want to know is I want to know, what did they anticipate the growth rate going to be for alignment? Now, this is synthesizing strategic transcripts intelligence for past quarter. Our platform is infused with artificial intelligence. So again, the whole point is, back in the day, this would have taken you hours to do. But the whole point is, we don't have time, because time is money, right? The less time, the more companies you can analyze, and the better you can analyze them. So now that we're going to, it's going to load this, I'm just going to switch to the comments section real quick. Cause sorry, I left you guys in the comments here. So let me see what's going on. Let me see. Sup Al Clove to $20 next earnings. Hopefully, it's a tough one. It's a tough one. I would say we break 5. Hopefully, fingers crossed. Will be analysts given price targets before earnings like last. I know that. What a joke. What a joke. Right? Again, here it is. Look at this. Look. It's typing. You see, the AI now is going ahead and analyzing the information and giving you insights. That's the power of the platform. It generates insights. But as it generates, let's continue. I already read this comment. I'm sorry. I'm behind. Okay. Oh, no. Okay. Not too many comments. And okay, I was checking to see, because for some reason it was telling me there's comments. Okay. So let's go ahead and have this generate. So again, this is for Alignment Healthcare, guys, right? It's not Clover, right? You see, improve 1-year member onboarding to accelerate MBR, which is like the medical cost ratio improvement. It's calculated differently, but it's the same. It's the same bucket. Market 4.5 star to 5-star plans aggressively, so they're obviously a good company, right? Okay, 2025 guidance: approximately 40% revenue growth rate, 130% EBITDA, long-term growth algorithm. We have that. Let's see what else. Investment thesis: Alignment Healthcare is uniquely positioned to outperform in Medicare Advantage due to differential care model, home-based care, superior star performance, 98% or 4+ stars versus 64% industry, scalable ex-California growth, Nevada. Is that North Carolina? Early success. So there's some competition for Clover near the area. I think Clover, South Carolina. But yeah, embedded margin expansion. Alignment Healthcare represents high growth margin expanding opportunity in a structurally advantaged MA niche. Investors should monitor 2026 star performance, potential 4.5 to 5-star upgrade. The company's on track to deliver 20% growth improvement probability. So there it is. So on average, they're going to grow any between. So let's go up here. Control find. Let's see here. Just kind of flushing through this real quick. Yeah, very good. Just scanning through this. Again, we're doing this real-time analysis, right? So it's good for you guys to see kind of what I'm doing, so you can replicate it. Haha, getting into full guidance of cash flow. I'm just scanning this real quick. They're talking about cohort 1, cohort 2 up here. I recommend reading this, guys. If you don't read this, then I don't know what you're doing, right? People that have lifetime access, you guys have access to the earnings. I would read this in full, right? Because they're in the same industry as Clover. Okay. All right. Let's go ahead and what was I going to say? So on average, they're going to grow anywhere between 35 to 37%. So it's around going to be 40% revenue growth, but we could go ahead and just confirm. We can do the reality check here, which is around a 50% growth rate for Alignment. We could go ahead and open up. We can also use our brain machine, but I'm doing this right now. I'm showing this on purpose. So for people that don't have access to our software, they can do it on their own. You know what I mean? So you guys can, I'm showing you where you get this information. It's not going to be the most accurate, but you could see here, 38%. So we could go ahead and, instead of saying, you could see 41%, 38%. So we could say 37% to be humble, right? Okay, so now that we know this, and we know the cash flow, we know the operating cash flow is 34.77. Now let's go ahead and do an intrinsic value calculation. So we'll go here. Okay. And we'll do 37. Again, automatically without doing anything, it calculates it for you, right? But again, we want to be a little bit more accurate. So we'll do 34.77, which we stole this number from here. Okay. From our Al Stock Trades terminal right there. Right? And then we're going to do a 37% growth rate, which is under the projection. And by doing that, this is the price that you get for Alignment Healthcare. So we're gonna screenshot this, okay? And we're gonna show you how accurate this is. We're gonna blow up the image because it's a lot easier to see. We're gonna blow this image up so we can analyze it. I'm gonna take the tab and I'm gonna move it closer to the Alignment Healthcare. So right now, currently, Alignment Healthcare is trading at $18.24. The highest it's been is $21.06. And, so anywhere, it's been trading anywhere recently between $18 to $21. So where on this graph, if you can tell me, Alignment Healthcare has been trading on, right? Where on the graph Alignment Healthcare has been trading? So the base case is $18.89. Whoop, sorry. So, right? So you could see it's, right? Right around this area, right? Base case is $18.89, and the bull case is $28. Now, of course, as Alignment Healthcare increases star ratings, they're going to get more operating cash flow. I think their cash flow is going to go up. I think the cohorts that they had from a year are going to mature, and they're going to make more money. So then ultimately, this operating cash flow will be higher, and then the CapEx will be controlled, hopefully, and then the free cash flow. Let's just graph free cash flow and operating cash flow. Right now, operating cash flow is up. You could see how it used to be both. The green is operating cash flow and the purple is free cash flow. You could see they've been negative. But then for the first time ever, operating cash flow is positive. Free cash flow is still negative. So what do you think is going to happen in 2025? This should be higher, and maybe this might turn positive. And that's what Wall Street's anticipating. So Wall Street put 34 million, right? And if we were to do the intrinsic value calculation, right? And we just basically put the numbers, all we did is we've taken these numbers from, Alignment Healthcare, and we've graphed and calculated our own price target. And we found out that, Alignment is worth anywhere between 18 to 28, right? Obviously, 13, the bear case is 13. Now, obviously, in the beginning of the, okay. So the question is, okay, Al, I get it. You calculated the price target. But again, I'm asking a question of what I think, like if I was in your shoes, what I would ask. I'm like, Al, I think you're full of shit. Yeah, you show me this number now, but it's already $18. So what, screw you, right? How do I want to know this when it was at $11. Well, okay. All I used was, and a lot of you are going to know what I'm getting at right now. All I used was 2024 numbers. All I used was 2024. When did 2024 end? Like, when did Alignment Healthcare have their 2024. Let me. We have Google here. You have access to all this information. So let's go here. We go to investor relations. We see financial releases. Imagine having to go through every damn release for Alignment Healthcare. Imagine having to do every freaking one. You know how annoying that is? Let's see. They release a lot of stuff. So the question is, when did Alignment Healthcare have their earnings? Okay. Well, I'm just going to Google it. Fourth quarter ALHC stock earnings. So again, because there's a lot of people learning here, so it's not fair. I'm going to go slow, right? There it is, right here. I think it is. Damn, they really had their earnings kind of late. February 27, huh? Let's see. There it is, February 27. So what was the stock price? Right here. February 27, Alignment Healthcare, they had their earnings here. Okay. They had their earnings here, February 27, 26. And all you had to do, ladies and gentlemen, was see the earnings, look at the numbers, right? Look at cash flow, right? Oh, Lord. Here it is. Look at every company reports in a systematic way, but look at the consolidated statement of cash flows, right? Yeah, you have from investing activities and capex and all these other things, and then let me see here. Run the analysis. Let me see if I can find the cash flow. I'm spelling it wrong. Let's see here. Oh, where are we at? Net cash from financing. Let's see. They don't even label it capital expenditures or. One moment. And all you had to do is read this in full. And go right here. This is the information they clump. Yeah, you can see they clump it all together, and you know, and once you read a lot, you get it. I just found it. It took me a while. You go here, and you say net cash provided used in by operating activities. It's this thing here. Okay. You go consolidated statement cash. You're like, oh, 2022, 2023, 2024. It went from 45 million negative. When it's in parentheses, it's negative. Negative 59 million. And then now there's no parenthesis here. It's positive. Okay. Here's your property, plants, and equipment, right? But, and all the other things, but it is 34.7. It's right there. So for the first time, you saw it positive, right? And if you trace back, what is this number here? 3477. 3477. So where did our Al Stock Trades terminal pull this information from? It pulled it from here. But this is the problem. Every company, you know, obviously, like, you know, used in everywhere, like, you know, Clover says discounted and continued, discontinued, or continued. Every company labels it, you know, it's still operating activities, but every company has it in such a different way. And when they present this, it's presented, you know, obviously this, you know, I don't, is this report, is this non-GAAP or GAAP? So there's, you know, there's non-GAAP here, but it most directly compared to GAAP measures. So there's a mixture of GAAP and non-GAAP here, right? So it's a bit hard, you know, if you ask me. That's why I searched operating, and it's right here, right? Usually it's just the mathematics. It's just every company looks a little different, okay? And the problem is you know, how much time you think you have looking at other companies doing it this way, rather than all you have to do is you enter a ticker, CLOV, and you, in the AI summary, tells you, oh, it turned positive. Done. You're done, right? Or for Alignment Healthcare, oh, I spelled Alignment Healthcare wrong. Alignment Healthcare, and you say, oh, operating cash flow turned positive. So you could see here, 34.77. Okay, so you could see how powerful that is, right? Again, sorry, it's, you know, it's taken a while, but this shows you, you know, how long stuff like this takes. You know, it just takes time. Again, our platform speeds it up for you, but yeah, so you find it here and you say, oh, 34.77. Okay. So you go here and you type in 34.77. You type in 37%, whatever, and you get the stock price. Bear case is $13.56. Bull case is 28. Base case is $18.89. When did they post this? They posted this on February 27th. You do the analysis, you run the analysis, you realize that, hey man, this thing's worth 18 to 25 bucks. This is when the earnings happened. And watch, as soon as Wall Street saw the earnings, what happened? Boom, stock went up 40%. Literally within a couple days, within a day, it shot up 16%. Right? Again, the point is I'm trying to show you you can set your own price targets. Wall Street is not going to tell you how much a stock is worth. They're never going to tell you. The only time they'll be truthful to you is when they're done buying. Then they'll tell you the truth. And then they'll tell you the truth higher than what the truth is, higher than the intrinsic value. So you can buy it at that so they can sell it to you. And then they'll drop down the stock price. So you buy high and sell low, and the cycle repeats, right? And, you know, it is what it is. It's a dog-eat-dog world, right? So, the stock price was trading at $13. The stock price was trading at below its bear case. And then all of a sudden it shot up to the base case. Again, my apologies, took me time to, you know, get all the numbers and all of this. But the point is, you know, I have a lot of tabs open and, you know, just, you know, a bunch of things, but, you know, the point is you see the overall analysis. Now, what happens if I were to say, well, Al, you know, year to date, you know, it was $11. When was the earliest point I could have figured out alignment was pretty good? All right, well, we could have gone to quarterly. Goes back to what B-Rad Cooley was saying. We go to operating cash flow, right? Let's do this. And let's say, when did it turn positive? Oh, it turned positive in Q2. Okay, it was Q2 here. Okay, it turned positive here. Oh, interesting. So it's more positive than it's ever been. So by Q2 and Q3, you should have figured out that there's something going on in 2024. So when it was literally $10, or when it was when it was around $10, you could have figured out that something's changing in Alignment Healthcare. Okay. And we could go in and then we could go to Q1 of the earnings transcripts for Alignment, and we could do control. We can say cash
basis points during the first quarter.
Sorry. Exit this. Cash flow. They said nothing about cash flow. So let's do Q2. Cash flow. Nothing. Q3. Uh-oh. Here it is. Ding, 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 right? I mean, guys, this is not rocket science, right? So let's go ahead and let's bring this open. And now there it is. So let's make sure we got all the cash flow. Or here it is. Let's zoom in. This was Q3. So what do they say? We see a multi-year pathway ahead of us to grow profitability, increase margins, and establish new geographics using internally generated cash flows. So what does that mean? These are that's another way of saying it's going to be internally generated free cash flow positive. Here, John Cow. John Cow is the CEO of Alignment. It's like, to them, it's like Andrew Toy, right? Again, I'm explaining to this really slow just for folks to, everyone's at different levels here, right? And the fact, I'm happy that you guys see me. I was trying to, look through the through the financial sheet. That's why I love my terminal. It really is a luxury to have all this data given to you in the same format, where you don't even have to go to someone's website. You just type in the ticker. Here, you type in Apple, and here's Apple. It's freaking beautiful, right? It's just easy. And then you have AI summary to help, using, AI analysis and generate insights. It's like having your own, full self-driving car, right? So where's John Cow? John Cow is the, there it is. Cash flow right here. Sorry, I'm blind. Okay. So yeah, I'm like, where is it? It's right here. It's right here. Sorry. Let me zoom in a little bit so I can find it. Where is it? Right here. Okay. So let's read this. Okay. John Cow. Hey, John. It's John. Okay. That's weird. Okay. Hey, John. It's John. Oh, you know why? Because the guy's name up here is John Ransom. So he's like, hey, John, it's John. So I think this is probably a little inside joke. All right, that's fine. So we feel good about 2025 growth. We feel good about the mix. We feel good about margin profile. He feels good, right? So all the growth is going to be really from existing markets in California, with a push towards more market share expansion in the ex-California markets. But overall, what we've said is we really are pushing to get EBITDA and then cash flow positive to fund the new market expansion growth that we anticipate turning back on for 2026 and 2027. And we feel really good about the actual end. And that was the second question, right? So the point is they're saying that they are about to be free cash flow positive, and their free cash flow positivity is about to fund the new growth they're going to have. And if you don't recall, that's what Andrew Torrey was saying, right? That's what Andrew Torrey was saying. So you see how all of a sudden they talk about cash flow here? So Q3 would have been a great time to get in. And Q3, Alignment Healthcare was around $10, right? And if you would have used the math, and where's the math? If you would have used Alignment Healthcare, looked at the operating cash flow and said, you know what? Let me graph operating cash flow. Let me remove all these other graphs. And then you would have been like, okay, here's 23, here's 26. So we're at Q3. Okay. And then Q4 last year was heavy. And you would have done the analysis saying, you know what? Again, that's why the stock didn't go up so much. It makes sense, right? It makes sense why, like, you would ask yourself, well, if they became positive in Q2 and Q3, it's obviously they're going to be positive for the full year. But the reason why Wall Street waited until Q4 was because Q4 of 2023, they were negative $187 million in the hole. Since they were only negative $8 million, it shows a dramatic increase. I mean, honestly, if you go to Enhanced AI Insights, I'm sure you can pick up the operating cash flow increased. Look at that. Operating cash flow has a difference of 1,100% right here. That shows you in 2020. So it shows you there was a change. In fact, let's do enhanced AI analysis here. There's a sign flip right here. Operating cash flow. See that? These are all the new changes that happened. Their free cash flow increased by 93%. Working capital increased. Revenue's good. Exactly. So they're growing in existing market share like Clover. So again, I talked a lot right now. So let me explain what I did. And I'm not going to show you again because that's ridiculous. You can rewatch the video. I'm just going to kind of summarize. So what I did first is I opened up the financial sheet for Clover. Okay. I'm sorry, for Alignment. And I was like, okay, the free cash flow is negative and the net income is negative, but the operating cash flow is positive. I know in order for free cash flow to be positive, operating cash flow need to be positive. And the fact that Alignment Healthcare's operating cash flow was positive by fiscal year of 2024, it gave confidence in Wall Street. As soon as that happened, you can see here, as soon as it happened right here, that's when Wall Street figured it out. X marks the spot right here, right there. As soon as Wall Street figured it out, boom, it shot up 50%, right? So again, and this is when I tell you, when a stock becomes fundamentally responsive to its intrinsic value. Is Clover at that level now? Absolutely. Absolutely, Clover's at that level, right? Now they just need to make sure they increase revenue and make sure they still free cash flow positive. Now, based off of what I'm seeing, their MCR is going to be around, based off of the BER, it's going to be around 86, 87%, which is historically 6 percentage points higher than the MCR. So their MCR is now around 80 to 82%, which is still industry leading. So I still think they're going to become free cash flow positive based off of what I'm seeing, right? And we're going to see how free cash flow positive they are by Q1 next quarter, right? Which is in less than a month, less than 3 weeks. I think it's less than 2 weeks. I don't know. Correct me if I'm wrong, right? Or it's I don't know. It's in 2 weeks, right? May 5th, 6th, I don't know, something like that. So the point is I just wanted to share with you. A lot of people are saying, why is the stock up? Well, it goes back. I mean, I feel like I'm repeating myself. It goes back to fundamentals. It goes back to, again, cash flow. Cash flow is king. This is why they went up. This right there. This is it. This is it right here. So if people are upset, I'm so sad. I'm so sad why why Alignment Healthcare is up. No, this is good. Don't be stupid, guys. This is good. You want Alignment Healthcare to be up because it shows the market Medicare Advantage disruption thesis is good. You want there to be multiple winners, right? So why did I talk more about Clover Health than I did Alignment Healthcare? Well, if you look at book value per share, now let's go ahead and graph book value. This is Alignment Healthcare. Where's book value? You see it here? Help me. There it is, right here. I can't look for anything. Okay. Look at book value, guys. Book value went from $1.78 down to 52 cents. Book value for Alignment Healthcare is 52 pennies. Right? Now let's go ahead and look at Clover. Okay, let's look at book value. Book value for Clover, $1.15 to 59 cents to 70 cents. I mean, it's growing up. Because they're free cash flow positive and ultimately they are better from a fundamental perspective. Clover's worth more based off of its fundamentals, right? I know it doesn't have a lot more revenue than Alignment Healthcare does, right? But it's not really that far off anymore. 2.7, and this is going to be at 1.8. But look, they're at a book value at 70 cents versus Alignment Healthcare's book value is at 52 cents. But then look, 2023 it was 84 cents. 2023 Clover was 59 cents. Now let me ask you something. Has Clover ever been 60 cents? You should be nodding your head. Yes, it's been 60 cents before. Okay, let me ask you this. Has Alignment Healthcare ever been 84 cents? No, it hasn't. The lowest, where is it? The lowest Alignment Healthcare has been is right here. Let me take a screenshot so you can see. Watch. Guys, this is not rocket science, right? You just have to have patience. This is the lowest Alignment Healthcare has been. $44.46. Right? Why? Why didn't it go to 60 pennies like Clover? Well, it goes back to this. Let's open up. You see how we're whole data driven here? This is why you need this information. Imagine being in the stock market without having this information. You're lost. Good luck. You're going to crash. You know what I mean? And I'm happy that people are watching this to seeing this is what you guys need. If not, get a Bloomberg terminal, but it costs $2,500 a month. Okay. Unless, again, if you're at a university and if you're in the Department of Finance and if you're doing a research with a finance professor, then yes, you can get a free Bloomberg terminal. But no one has access to that, right? All right, so let me show you. Let's look at institutions. Guys, look at the institutional ownership percent of Alignment. Dude, it's freaking 87% to 92%. Guys, 92% of freaking hedge funds and institutions own Alignment. Of course, it's not going to drop like crazy because institutions are smart. They're not paper handing like retail investors. Institutions know what operating cash flow is. Right? Exactly. Thank you, B-Rad. He said it. No retail in Alignment. I mean, go ahead and go to Webull and go to the comment sections on Webull. You'll see there's no retail investors there. Nada. Right? It is what it is. So when the stock price dropped in 2023 to like $4, they were buying, right? But if you go ahead and go to Clover, how much do institutions own for Clover? Look, 15%. And finally now they broke off because they realized, holy shit, this thing's about to be free cash flow positive. And now it's 18.9%. So around 19% own Clover. So again, 19 to 20% of institutions and hedge funds own Clover. Has it increased recently? Absolutely. How do I know this? Okay, look at the number of investor holdings. Before, when Clover was 60 pennies, we only had 133 institutional investors. Now we have 193. That's a change of over 33 more institutional investors. Okay? Total invested. Before, only $71 million was invested. Now, it's $292 million. Okay? Let's look at the number of new positions. We have 55 new positions open for Clover, bigger than any history dating back to 2021, back into when the stock was $15, right? So you could see the institutions are coming back. But here's the problem. Retail investors are not selling. Again, they are, because if you look at the Robinhood data, it shows that they are, but not all of them. Why? Because, maybe this channel that we have is actually educating people, teaching people about financial literacy. And maybe, just maybe, people are maybe having the idea that, you know what? Maybe I don't want to sell this to that damn institutions so they can make money off of me. They already made money off of other stocks, and now this thing's about to become profitable. And what? So I'm just going to give out my shares so they can make the money? Right? Again, this is an educational platform, not financial advice. I'm just showing you the data, and you go ahead and you interpret the data on your own, right? You have the data, you have these graphs in front of you, right? This is all part of our Al Stock Trades platform. One-time payment, lifetime access, no bullshit, right? The only thing is, if you want an add-on with generative AI, okay, fine. There's an add-on to that. But everything that you see here, it's all included in lifetime access. There's no crap. There's no bullshit involved here, okay? So the problem is right now, institutions are like, well, shit. Retail investors are not selling Clover. What do we do? Well, they can do what they did in SoFi. So what happened to SoFi? I'll tell you. Look at SoFi, guys. Oh, man, I spelled that wrong, but it's okay. Google knows my stupidity. Okay, so okay, look at SoFi. Dude, it went all the way up to $18, and then now it's dropped it dropped as much as 47%. It went from 18 down to freaking $9. Imagine owning a stock that's $18.42 and it dropped down to freaking, Timbuktu, right? Of course, there's going to be some retail investors that sell, but it's okay. Institutions are there for the long run. It's a game. It's okay, fine. We'll bring it up to $4.80. We'll bring it back to $3. Okay, let's say it's like a game of who can hold on the most. Let's say we had 100 people, retail investors holding, and let's say 20 retail investors are like, fuck this, I'm out of here. They let go. Institutions grab those chairs. So let's say now those people that passed the, what's that little game called? It's this guy, fine, Squid Game, right? Squid Game. Let's call it Squid Game, right? So now you have 80 retail investors. Now the stock goes from $3.60 to $5.80, or maybe $6. And all of a sudden it drops down to, $4. And let's say 10 more retail investors saying, screw that. This might go back down to $3. I let go. Now you have 70 retail investors, right? And then the rest, the institutions grab them. They nibble. They go, nom, 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 nom. And the cycle continues going on and on and on and on until you get maybe 50% retail investors, 50% institutions, or whatever the breakdown is. But you see, they're trying to wash retail out. Again, I've seen this play out a lot. And let these videos serve as a documentary, and you'll see it in real time. You're like, holy shit, how does this guy know? Right? According to Schwab, institutions is around 21%. So, Joey, our data is a bit more fluid and is a bit more active, and it always tries to undershoot and underpredict. I would rather have an underpredicting analysis rather than overpredicting, right? You'll see a lot of my analysis underpredicts and is always to be conservative, because my goal is to make money, right? My goal is to make money, right? So I don't really trust what those other folks say. I trust in kind of my platform. Obviously, there's some bugs I fix, but this is pretty accurate based off of what I've seen, right? All right. Because a lot of these Schwab people, what they do is they buy data from other folks, and these other folks have crap data, right? You can see it from the Robinhood side. They have the hedge fund data, and the outsourced third-party data is wrong, right? It doesn't make, it's fake, right? And they don't check it, but the Robinhood internal data is good, right? Okay, hope that makes sense. Okay, whoa, man, that was a lot of talking. All right, what else? So we went ahead and talked about. Okay, so we talked about what else? We showed you these graphs. We showed you that 90% of retail institutions own alignment, and that's why what happened was they saw the data, the Q4, and then all of a sudden they realized it was good and it shot up. So Honestly, that's it, guys. I mean, that's pretty much it. I mean, do you guys understand what I'm saying? Does this make sense? Like what I'm saying? Please rewatch the video. I'm telling you guys, if you don't understand, please rewatch the video. You're leaving too much information on the table. You're leaving too much. I mean, you're leaving too much on the table here. It's kind of criminal. You know what I mean? Yeah. Then you have now alignment versus counterpart, and the thing is, I can't make a fair argument or I just don't have the numbers for counterpart. I'm waiting, Andrew. I'm waiting for you. You know what I mean? Oh, yes, I have one more thing to talk about. Yes. Oh my God. All right, what's his name? Sorry, I'm like going back and forth, guys. I'm giving you a headache here. Sorry. John Cow. I'm sorry. I'm giving you guys a headache. So you guys, your eyes are going to be like, what the hell's going on here? Okay. So let's go to John Cow. So here's John Cow. You know what's interesting? I should honestly connect with him. If you look at the mutual friends, Andrew Toy and them are not following each other. I don't see them following each other. Isn't that interesting? They're not following each other. And I get it. You're like, well, duh, Al. They're competitors. But isn't that interesting? It's kind of interesting. So anywho, that's just kind of my thing here. Another thing I want to point out is look at him. He's an MBA. He has a BS in finance and MBA. Andrew, look at Andrew. Andrew has more followers. Go Andrew, right? And we're connected, which is cool. Love you, Andrew, right? But look at the stark difference between Andrew and John. Stanford, BS in computer science, master's in computer science. Andrew is a software engineer. Tech versus business. Thank you. Can you use Dr. Patel, can you use the terminal to see which companies just had a sign flip? Oh, hell yeah. Yeah, of course you can. 100%. Absolutely. So, yeah. Let me show you. Of course. Generative AI. Yeah, it's this one. Okay, good. So yeah, of course. Let's see. So let's do Tesla. Let's do Tesla. Here's Tesla. Okay. And here's the AI I'm covering it up. Here's the AI summary, right? Let me zoom in because let me zoom in. Yeah. Here's the AI summary. This is whenever you see a company and if there is a sign flip, it'll tell you. This is a more simple summary. It'll say, hey, it turned positive in 2018, free cash flow, it just gives you a little summary. Okay. And then if you do a quarterly, it shows you here. If it turned negative, it'll be in a red color. It'd say, hey, Q1 turned negative. And then for Q2, it'll say, hey, look, it turned positive. Right? So there's that. Let's go ahead and do end phase. End phase on the annually, it says, look, end phase. It's kind of like Clover, isn't it? Operating cash flow 2018 turned positive. Free cash flow 2018 turned positive. And then net income, I think Clover is going to be a little bit 2 years, not this year, right? But net income turned positive. See how it gives you a little summary here? Of course, yeah. So this shows you OCF flips. See how it shows you the OCF flip? And you can obviously graph it yourself, and you can see from your eyes, and it labels it in green. So I try to make this as easy as possible. You can see how there's a little green highlight there. It tells you when the first time it's ever turned green. So now let's go ahead and look at Clover. Look at Clover. Look at this. So it tells you, right? It says, hey, it just turned positive, right? And then you look at quarterly, and it gives you this long thing. I mean, Clover's been on a journey, right? 2022 turned positive. Q4 turned negative. You could see, you could kind of follow the story of Clover, right? It tells you when it turned positive and negative, right? But here's the cool part. Let's go ahead and let's show you Clover. So now let's say you want the enhanced AI analysis. It depends if you want the quarterly, you put the enhanced AI. Let's do the annual enhanced AI analysis. You click the enhanced AI analysis, then it shows you. Let's look at the most recent. Let's look at 2024. This shows you here. Operating income, 77% improvement. And the normal is 24%. So you know it's good. Operating margins, 79% improvement. Net income, 79% improvement. Earnings per share, 82% improvement. Book value, 17% improvement. So you can do a book value calculation. Operating cash flow, 130% improvement. Sign flip, right? See that sign flip? Zoom in. Right? Free cash flow, 128. Sign flip, right? And then guess what? You can hit this button. And what it does is it'll take the enhanced AI analysis of the annual and isn't that cool? You see this? It'll take the enhanced AI analysis of the annual and quarterly and gives the analysis of this. You see this sheet here in the background? It's analyzing the sheet of both the 10-year, of the quarterly, and the annually. And it'll go through all of the SEC F13F filings, over 3,000 pages, and it'll go ahead and generate insights right in front of your eyes. Let me zoom in. And it gives you insights, which is called strategic financial intelligence. You see that? And I mean, I'm a big nerd, okay? But yeah, you see how it gives you all that information? And this is more the numbers game. And it gives you recommendations and whatever, right? And you see how it types it. I mean, it literally you got multiple brains typing for you, right? What else? And of course, you can do the generate insights for the earnings call, right? But I like this one because this is all numbers. And then here, final takeaway. CLOV shows promising operational improvements, but remains a high-risk bet. Monitor quarterly cash flow trends and revenue stability for confirmation of a turnaround. Isn't that what we're doing? Didn't I basically say? And I have over 10 years of experience in Wall Street, right? And I said that I'm monitoring Q1's cash flow. And it just basically told you that. You need to monitor that because that's what Wall Street's doing. And it's giving you insights of what Wall Street's looking at. Isn't that cool? Right? And then let's read this. Positive, improving margins, cash flow indicates operational efficiencies. Revenue is recovering. In 2023 to 2024, they have 9.5% gain. Could attract more growth investors. Well, we know that in 2025, they're going to grow 37%. So you'll see the growth investors come. The negatives. Yes, there's been some share dilution and inconsistent profitability. This will deter value investors, but that's changed. Macro risks, healthcare policy changes could pressure margins. Well, actually, Trump just bailed freaking Medicare Advantage out. They didn't need it, but whatever, right? Outlook. CLOV is making strides towards profitability, but switch to revenue growth and cost disciplines, and right? There's critical for stock upside. A speculative buy for risk-tolerant investors. Wait for consistent positive EPS for broader appeal. But the problem is by then the stock price will be $8 and $10, right? So you see how amazing this is? Again, guys, I don't know. Like, you tell me if you guys like it. I obviously created it, and I'm just really like, I'm really happy. You know what I mean? This is really cool. You know what I mean? Like, I worked my ass off for. I gained a lot of weight. I worked my ass off for this, guys. You know what I mean? This is so cool. I mean, look at this. Evaluate cash flow. Consistent prioritize investments only if positive operating and free cash flow trends continue over multiple quarters. Reducing liquid. Guys, this is amazing. Set clear exit criteria. Define thresholds. Further revenue decline, cash flow deterioration to cut losses if turnaround stalls. I mean, it literally, there is no emotion. Right? You can do micro strategies here, all of it, guys. No, I appreciate you, Shan. It's just really nice, guys. And doesn't this terminal look sexy? I'm just proud because I had this vision, and to be able to see it and to see people use it and that people make money on it. I mean, just kind of put your position on my life, right? I came from nothing. I had no family, worked my ass off, and all I want to do, I mean, anyone who goes to medical school, ideally, whoever wants to be a doctor when they're a kid, They always want to help. You know what I mean? Like, that's the purpose of helping, being able to be there for somebody. And the fact that I'm able to do that now and help people, and then now be able to have a software, like I don't have to be here for you. Like, you have the software. You can be in Belgium. You can be in China. You can be in Japan. You can be in Canada. You can be in anywhere in the United States. You can be in Mexico. And you can use this software that I built while I'm saving someone's life in the OR. Holy crap, dude. Like whatever is doing thrombectomies, burning a cancer in the liver, or removing a clot from the leg, or the PEs, clots in the lung. I can do that while the software is typing away and generating. Holy shit. Yeah, isn't that amazing? So it's really cool, guys. I just being able to have this, it's like I'm doing service 24/7. And if you're not doing that, then I don't think you've seen. And again, people don't have the opportunity of doing that, but hopefully I get you there. There's something called Maslow's. Let's see if I can find it. Maslow's hierarchy of need. Not many people get to this, but this is some psychology for people interested. In life, we have to make sure you have a home and safety, all these things. But this one here is tough. Finally, now our core needs are met. We've ready to pursue our deepest desire for self-actualization, to become the most complete and authentic version of ourselves. With the fundamentals taken care of, we're free to act as we choose, align with our values and higher purpose. I'm trying to get everyone to this because this is beautiful. I think this is, I don't know, I think I'm speculating here, but correct me if I'm wrong. Nirvana. I think this is like in Buddhism. Maybe I'm wrong. A transient state in which there's neither suffering, desire, nor sense of self. A subject is released from the effects of karma in a cycle of, I don't know. I feel like it's a little bit of this and a little bit something else. It's just you get to a point where you're at peace, right? And I think that's where I'm going towards, right? And that's what I want to build. Just be able to build this legacy to help show you guys that there is a way out. There is a way out. And I found it. And I can't believe people are quiet about this. There's people out there that, because listen, I know we went ahead and we just talked about all this information, but guess what? Guess what, guys? Guess what? Watch this. You can see how happy I am, just guys, watch this. Ready? Look. On top. So, okay. So what happens? What happens when a stock hits its intrinsic value and you're ready to start doing covered calls? Then all of a sudden you start doing wheeling strategy. So let me give you an example. So there's people out there that own 200,000 shares of Clover, right? So imagine, and the options chain for Alignment Healthcare is kind of weird. Again, majority is owned by institutions. So it happens every month. So May 16 is the next options chain. So it's $18.24. So the $20 covered calls is 75 cents. So if we do 2,000 contracts right now, assuming that's it, we've hit the pinnacle of Alignment Healthcare, right? We don't know. That's it. We're happy selling at 20. It's fine. You do a covered call, you can make $150,000 a month, right? And then let's say you're in the money. That's fine. You do a put, and a put actually pays more. So a put, you go in and you a cash secured put pays you $480,000 per month. So you oscillate now, let's say from, puts and calls. Isn't that insane? Isn't that insane? Right? Normal time for a stream. Hell yeah. I just got off the phone with my brother telling him the power of the wheel. Absolutely. And soon Right now, it's still risky because covered calls are risky right now because Clover, I think, is going to shoot up higher. But soon, our time will come. All you guys are watching right now. Oh my God, I can't wait. Guys, you have no idea. I can't wait. I cannot wait. I'm like rubbing my hands like Nancy Pelosi. You know what I mean? Like, when she gets excited, I, I cannot wait. I cannot wait until, Clover hits its intrinsic value. And let's say it's like 25 or 30 or $40. And we do our covered calls even more. We do our covered calls and we say, ladies and gentlemen, everybody, power the wheel on. Power the wheel. We turn on the wheel. Holy shit, guys. We're going to be powering the wheel and the amount of money we're going to be generating. Oh my God. We're going to have our own Lambo club. I'll tell you, right? Even I don't know if I fit in the Lambo. I got to lose some weight. I don't know if my fat ass will fit in the Lambo. Excuse my language, but I got to go lose some weight, right? Let's see here. Don't underestimate the power of the wheel. And never underestimate the power of all stock trades. Power of the box, baby. I love it. Yeah. Don't ever underestimate the box, right? Cold hard cash, right? No, it is. Yeah, it is powerful. It's just some powerful stuff, guys, right? And again, I'm surprised because Alignment Healthcare is majority owned by institutions. So why is the wheel strategies doing good with them? It shows you that they're doing it too. That's how they make money. All right, let me see. Okay. Oh, what else I was going to say? Okay, so now that we figured out the intrinsic value for Alignment, let's figure out the intrinsic value for Clover. Okay, so let's do that. So Clove's free cash flow is 33.29.
33.29.
So we'll put Clove here. We'll put 33.29 and we'll put 37%. Again, if they continue growing at 37%, then hallelujah, checkmate. That's it, guys. We're going to Vegas. Okay. We do that. The stock price is 33.29 for 37% is $4.87 and $10.10. Now you're going to say, why is it low? Because we did 33.29 at 37%. So you can see the base case, just like how Alignment Healthcare is trading at base case, Clover at base case is $6.79. Okay. So I anticipate in the next 6 to 12 months, Clover is going to be over $6, which goes back to what Craig Holm has said about 10 times. He keeps reaffirming his goddamn price target, right? So, but here's the thing though. We have to dig a little deeper. Didn't Peter say that we have discontinued free cash flow, that we're going to continue being 80 million in free cash flow? Yes. So 47 million was discontinued. So if you say 33.29 plus 47, that's 80.29. So it's going to be 80. So if we add 80 to 37%, this is what I think the true value of Clover is. Anywhere between $11 as the bear to $24.24 as the bull. But again, to be humble, I'm going to say instead of 37%, we'll do 25%. Because I need Clover and I need Andrew to prove to me they can get 2 years consecutive of 37% growth. Because Wall Street, right? They doubt. So look at that. 5 to 10 with the base of 7. So ladies and gentlemen, I think in the next 6 to 12 months, we are going to be seeing a $6 stock price. Right? Obviously, there's Trump and all that bullcrap, but the fact that Alignment Healthcare was able to get to its base case, I think Clover can get to its base case as well. Again, I think in the next 6 to 12 months, I think it's going to be $6 stock price. Okay? Ladies and gentlemen, that's all I have for you. As you can see, all my discussions right now and all of my analysis, I used my software. And the problem is the software is like a GPS. Think of yourself as a pilot. Okay? The software helps you guide where you need to go. Okay? And for all the people that are part of our lifetime access, we will be hosting a seminar where you guys can join and ask questions in person. So we can get you, so you guys can get some more experience on how to use this, right? So I'm developing that. Okay. But that's all I have for you guys. I hope this was enjoyable. Happy Good Friday. I love you all, and our time will come. Our time will come. That's it. And one of these days, almost like Captain America, well, you know how he says, "Avengers, assemble." I'm gonna say, power up the wheel. Right? Not as powerful as Captain America, but I think we're gonna make more money than him. You know what I mean? We're gonna make more money than Captain America, right? But I'll tell you, I'll just say power the wheel, right? Assemble and power the wheel. And once that happens, the days of struggling will be over, right? And it's gonna be fun. It's gonna be fun. By the way, just a quick shout out. We got this is really cool. We have 170 viewers right now that are watching. Let me show you. About 54 are coming from YouTube. So we're dual living this broadcast. By the way, sign up for the LinkedIn too for free. If you can like us on LinkedIn and follow us, we'll be able to broadcast the LinkedIn soon. They have a rule 150. We're at 130 people now. So if you can search Al Stock Trades on LinkedIn, you'll be able to find us. But the Al Stock Trades for the YouTube, we have 54 people. And for X, we got 116 people. So 170 people. So that's really good, guys. All right. Love you all. And that's all I have for you guys. And let's see if we can find my favorite song.
Albert Allen's got the secrets in his hand. Retail heroes taking over this land. Trading stocks with a master plan. Fortunes rising on the Clover brand. Numbers rolling, deals never stop. Bulls are charging, markets gonna pop. Albert's wisdom higher than the top. With Clover Health, we'll hit the jackpot. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's Health, dollars gonna sway. In this game, no more bills to pay. Through the highs and lows, we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong. Stocks are climbing, reaching for the skies. Albert's insights cutting through the lies. Retail dreams standing tall, they rise. In this world of trades, we're the prize. Fortune calls, Albert leads the way. Retail winners here to seize the day. Clover's Health, dollars gonna sway. In this game, no more bills to pay. Through the highs and lows, we stay strong. Albert's voice guiding us all along. Clover's growth, we're playing like a song. Investing right, never going wrong.